Welcome back, guys. In this video, I want to talk about why 90% stock market investors just straight up fail. They actually don't make any money throughout their lifetime in the stock market. I'm not trying to say that I'm this investing god and I know exactly what you should do in this and that. But what I do know is that there are some definite characteristics that are consistent among people who do poorly in the markets. And overall, I think it's really sad because I think most traders probably do end up losing money in the markets. That's just a catastrophe because, as far as I know, the stock market is by far the most reliable way to generate financial freedom that exists on this planet. So today, let's talk about what causes most traders to lose money. Then I'll give you practical tips on how to avoid it so that you can be part of the few that actually make money with trading. New thinking, new finance. Welcome to Legend Finance Academy, the place where future billionaires come to get inspired. If you're not subscribed yet, you're missing out. Reason number 1, investing money that you are not prepared to lose. Under conditions like we're currently in, don't be surprised to see your portfolio go down 30 or 40%. You have to be able to stomach that. No one is forcing you to invest money that you can't afford to lose. If you're not in a good position to be putting up that extra money to invest, then it may just not be a good time for you regardless of what the market is doing. Also, if you need that money but the only reason that you're really considering investing is because you're banking on that stock going up in a few months, you might need to reconsider your intention behind investing. Because that's getting a little bit more into a gambling mindset. You have to consider what if the current condition continued on for 6 more months, and not saying that it will, but if it did, do you have emergency savings set up to cover your food or shelter, your water? All of that is really important. So if you're going into investing kind of just as a gamble, it may not be the best time to do that. Reason number 2, no plan. If you're not trading with a plan, you're not a trader, you're a gambler. The vast majority of traders, human beings are born to buckle under uncomfortable pressure, the same way we reach for the chocolate bar instead of the carrots. And in some cases, even those Wall Street investors were not an exception. In the late 1990s, venture capitalists and individual investors poured money into internet.com companies. Most of these companies lack the basic financial stability that investors usually seek. But afraid of missing out, investors continued to listen to the popular press and follow the herd with their investment dollars. And this was what happened. To avoid losing money in the markets, don't follow the crowd, and don't buy into overpriced assets. Instead, create a sensible investment plan, and follow it. For me, I like having a general plan laid out when I'm going through the process of actually choosing stocks. Here are some questions that you must ask yourself, like setting a hurdle before getting your money into the risks. 1. Why are you buying this company or this stock or ETF? 2. What price would you sell it for? 3. Are you trying to sell it tomorrow or in a week or in 10 years or never? 4. If you are going to sell, what is your reason behind? 5. Why you think that stock will ever hit that price? 6. What's your reason for selling it at that price? Understanding these questions, you can start developing a plan for your general investing strategies. The third thing you need to be a successful trader is having the right mindset. I see this all the time. People think all they need is the right tool or the right strategy and they will be successful traders. But that's not the case. The reason why traders fail by not having the right mindset is because they let emotions get the best of them. The 2 main emotions that we have as traders are greed and fear. We are greedy, we want to make money, and this is why we get into this game of trading in the first place. Then there's also the fear of losing money, but you've got to be able to control these emotions. Something important that you need to understand is that the market doesn't owe you anything. Sometimes the markets give, and sometimes the markets take away. This is why revenge trading is something that you need to avoid at all costs. I'll say it again. Avoid revenge trading at all costs. The good news is, in the long run the market usually likes to give, at least to those who are serious. You must understand that losses are part of our business as traders, and it is sometimes really easy to become overconfident. However, whenever you think that you have the markets figured out, that's when the market is going to throw you a curveball.
Show him a curve!
There will be always surprises and situations that you have never encountered. Some call these black swan events. Of course, the risk of losing money is always going to be there. And these are just my opinions, but hopefully you can find some of this information helpful in kind of guiding you on your path towards investing. At the end of the day, you're the only one that's really responsible for your investing decisions. So, it's super important to stay calm and do your research, and to make sure that you're making informed decisions. I hope you guys enjoyed the video. Remember to subscribe to the channel and I will see you guys next time.